Welcome back to our channel. Today we are going to be doing the April monthly market update. Those of you that don't know me, my name is Alex Hughes with the North Pacific Homes Group here in Victoria with eXp Realty, and welcome to our channel. We try to get out a video every single week, regardless if it's market updates, whether it's tips and tricks, or property tours. So starting off with the stats, we had 652 properties sell, which was a 4.7% decrease. But the big outlier was condos. There was actually 10.1% decrease in sales since April 2024. Now there is a big outlier as to why we saw a decrease, and of course, the federal election. When you look at the historics of Victoria real estate, whenever there's been a federal election, there always is a freeze up of activity, not necessarily based on who's running or what policies they have, but only because they want to see who gets in. So now that the election is over and we understand exactly who's going to be leading the country, I am anticipating there to be more activity coming back to the market. So single family homes landed in the Greater Victoria area with a benchmark price of 1.35 million, which was 3.3% higher than April of last year. Condos with a 1% increase getting at 566,000. So here's what's interesting. When people talk about pricing getting too high and the market crashing or there's going to be a correction, this is where the conversation needs to have, and it's interest rates. Interest rates are by far the biggest driving factor for the activity in the market. So taking a look at the difference in purchasing power today and this time last year. Looking at May 2024 interest rates, I used 6.05% for a 5-year fixed. Looking at the benchmark housing price, just over 1.3 and with a 20% down, you're looking at close to $6,800 a month in your mortgage payment. Now moving to today, if you were to buy a house, today's benchmark home price, 1.35 or just shy of, today's interest rate of 4.3% for a 5-year fixed and a 20% down payment gives you $5,800 a month for your mortgage payment, a difference of $1,000 from this time last year. So although prices went up, interest rates obviously dropped dramatically, still saving you $12,000 a year. Another big determining factor in the market is inventory levels. Of course, when we have a lot of demand but not so much supply, prices skyrocket. If we have a high demand but a high supply, prices are going to stay relatively stable. We have 3,425 active listings by the end of April, which was actually a 13% increase over May and around the same percent increase from April of last year. Another interesting stat is the luxury market seems to be picking up. We had 24 sales over $2.5 million. We haven't seen that number since it was 26 back in May of 2024. Since then, it fluctuates between 8 and 16. So it's very interesting to see that the luxury market is starting to pick back up again. And when you look over the last kind of 4-ish months, that number has been steadily increasing month over month. So to summarize, personally, it is my belief that interest rates are the largest driving factor in our market. It is what helps buyers get their purchasing power and makes home buying more achievable for them. If interest rates drop or if they stay the same, I do anticipate activity still staying strong and prices going up. On the flip side, if interest rates go up, the next announcement is in June. I do think prices, of course, will either stay stable or they will drop, and inventory will play a big factor in this as well. And that's everything I have for you today. I hope you were able to get through this video. I hope you liked it. If you did like it, like I said at the beginning, give us a like, please. And if you haven't already, please subscribe to our channel. It makes us feel like we're actually doing something that you like. We're getting out informative, educational content to you. And if you like this video so much and you want to get into contact with me, please do not hesitate to do so. My contact info will be down below. Like we are on the flip side.